morning, everyone. Can you hear me well? Okay. Okay. Happy to be here in Cypher 2017. This time around, last time when I came, we didn't have banks and insurance companies very well represented. So happy to have this included. We have something strange about life insurance. My alumni doesn't invite me for the last many years. I think we have something like the WannaCry ransomware. Most people try to avoid life insurance. And I here have a whole room full of people. So nice to see you all here. We're going to talk about a serious topic and how analytics, sort of has been implemented. A lot of folks gave me good reviews about the choice of the topic, 10 on 10. I know Indians are a value for money crowd, so you need to cover more in a shorter period of time, so I'll try to do justice to that. And so the very nature of the content, therefore, will give you more breadth and not depth. Yeah. So this isn't about a session where I'm going to throw some magic dust around. Some of you heard what is magic dust yesterday. So I'm not going to throw magic dust. So there are not going to be forests and trees being talked about here. But from a suitability perspective, if you're keen to see how a industry has utilized analytics to its fullest, there you are, right? Also, I want to put in through the next couple of minutes, as well as in every slide, a context in which you have to understand the utilization of analytics. Oftentimes, things when not seen in context are jarring. So I'm going to put some context. The last time when I came here, I saw intense debates about analytics in many different industries, and for those of you who are third-party service providers, how you help your clients. I saw that one of the things that we have to take up from here is how can you utilize some of these ideas and cross-pollinate in your respective industries or your clients. This morning I came in quite early avoiding the traffic, and I was listening to somebody who is in a captive retail product company, and he is talking about location store and choice store and how he has used analytics, and you will see I am also talking about the same thing. So wherever you talk about the business problems in a broader sense of the term are going to be the same. It's about how you're going to use your skills fungibly at that. So with that, let me get started, and just a bit about myself and the organization. I represent Max Life Insurance Company. We're the 4th largest life insurer. So we are all about protections and saving solutions. We are based out of Gurgaon. We have offices all across India, and we create solutions only for our own consumption, for our business, and so it's not a third-party setup. It's for our own consumption. We've been top quartile in all the business parameters, and we sell through large banks, Axis Bank, Yes Bank, and so on and so forth. So that's me in good times. I was told when I was entering analytics, there's always a control and a test sample. So I preserved this photo for myself. Before and after how it is, and during, how it is. I know this is a serious topic, so we got to put some amount of humor in it. And the humor is not about me, but about how we all approach life insurance. I've done few things, been stuck in this industry for about 15, 16 years. Finally, I waded past analytics, and it's a bright area. I like things to be completed, and I like things to be completed on time. But there is something in me that, that I like doing, which is work in progress. So analytics in that sense and music in that sense is also work in progress. Nobody ever seems to claim that I finished it. So I'm a student of analytics and music as well. So much about me. Let's get into understanding what business I talk about. All of us are insurable, by the way, out here. And I wonder how many of us would have shared with your respective spouses how much worth you are in life insurance. They don't share, because spouses realize they're more valuable when they're not around than when they're around. So people don't share what life insurance. So this is not a Facebook category. There were times when we were kids, we were used to writing diaries, and we don't want others to scrutinize that diary or look into that diary, right? Some of you have done that. No, you can't read my diary. It's very personal. And then these days we are posting everything about me, what I did and what I do, what I'm planning to do, where I'm holidaying in the Facebook, and if you don't like it, then you get angry. So this is not that category. Okay? So this is a little bit of a stigma in the industry about life insurance, and people wanting to talk about it, most of the issues remain with insurers. But in a sense, time and again, it has been proven that when a customer enhances his value, when a provider is able to improve his customer value, they will do well and they will grow in that industry, because everything is revolving around how customers see value. For improving our customers' value, which is about how monies are going to be improved and kept in savings for a longer period of time, we hire our salespeople, who in turn hire agents, and then this cycle continues. It's not as simple. If it were this simple, this was la la land, but it's not like that, right? What happens is, the trouble starts. There is trouble. Somebody wants to short circuit something. Yeah, this is a 15 to 20 year category. People buy products of savings and protection for 15 to 20 years. Sometimes, as I was saying, some part of the issue lies with insurers, some part lies with agents, some part lie with many others in terms of misunderstanding. We had yesterday, a lady was talking about a goldfish generation. People can't focus beyond some 7 or 8 seconds. So imagine 15, 20-year-old long-term products. We want houses like this, but if the house is not delivered, we'll do morcha on the Facebook, right? So how do you, sustain an interest and, be with the product for 15, 20 years? Some trouble starts because they have been missold, misunderstood, and so on and so forth. And so we justify our jobs because the job is complex. People try to fraud you. They don't want to pay as much premiums as they're supposed to be doing. Basically, if you look back, as I was saying, life insurance is a product for societal good, and the common goal for all parties in this is common goal is societal good. But we do not understand it like that. If all premiums were being paid, your bonuses will be improving, the cash value will be improving, agents will keep getting money, and we'll all be good, in good shape. But when some trouble starts is when the claims happen and the leakage pool starts. Just to understand, beauty lies in understanding the figures in context. When I was talking about context, 99.5%, and I'm including LIC as well in this, 99.5% of claims in India are maturity claims, which means people live that long and then take the money. Understand that? In the rest of the 0.5%, what happens, I'll talk to you a little later. So all of us are here to live long, and that's what all of us want to do. This is the value chain where we have embedded analytics. It starts from how do we source our sales force, to how do we acquire customers, to how do we underwrite them for risk, and how do we retain them, and then finally build a better product density around them and retain them for a longer period of time. So through and through, I'm going to be revolving around this, and as I was once again reiterating for those who have come in a bit later, this is going to be about breadth. This is going to be not magic dust. This is going to be on how have we utilized it from a business analytics perspective. Let's get started. Identifying untapped market opportunity. Now, we cover lives, and India has a great strength in having a large number of lives. But all lives need not be insured. Insurance is replacement of income, so we got to figure out who is supposed to be insured, and where are they more often than not available. So we have our offices, say Indiranagar, Koramangala, Whitefield, and JP Nagar, Jayanagar, etc., etc. They have been there for some time. There are newer areas of where community living is increasing, and so we used our existing customer data. We have about 34 lakhs, 35 lakhs of lives whom we have insured so far. Where are they present? Where are our sales folks present by way of geospatial mapping? Where is our agent community coming in from? Where a newer source of society is coming in from? Where is going to be the next new area of occupancy? Overlay it with financial data. Insurance, as I said, was in replacement of income. So if you're earning lower, right, your replacement costs are going to be fewer. There is a large emotional loss, but it's all about money, honey. Therefore, we superimpose this with financial data that we get from third-party providers and see where we are, where we should go, and then relocate a few offices. This is like what I was saying earlier at the start of the presentation. It's about store location, right? And so that's one case that we did. And therefore, when you're there, how do you develop go-to-market strategies so that development and recruitment comes from there? That's the first application we had. Let me get into something else. As an industry, we hire about 3 to 4 lakh agents every year. As a company, we hire about 40,000 agents every year. Okay? You would have seen a few agents who have come in bags. We all grown up. Our first policies, you know how it sold to used to be bought. Agents in general sell 3 to 4 policies and they say bye-bye to us because it's a tough job. It's a real tough job because all of us don't like to buy life insurance because we believe we will live long and long and long, right? But that's not the case. If agents keep moving away from us, we have spent costs in training them and hiring them, right? Our productivity costs are lower. So we have to be smart about how do we get them to be contributing, how do we source them. It's in the value chain, that's the first upstream work that we do. So how do we get value right up there? Only about 12% of our agents stay on till their 6th month and only 6% stay on till the 12th month. Sorry, I mixed it up. 12% till the 6th month and 5% to 6% in a year, right? So how do you get more people who are smarter, wanting to do this stuff and being with us for a longer period of time so that our productivity improves and they are able to lead, fulfilling lives for them as well. It's an earning for them, right? This industry continues to be paying well for agents as well. So what we did was, we didn't want to confuse our sales force with analytical tools and techniques. So we created a model of understanding where agents come from, their demographics, their age, their occupation, their inclination to do, meet with people, resilience in taking no, and so on and so forth. And we developed a pointer. It's like a CGPA. We developed the pointer and shared with our sales force that below this threshold, don't hire agents, and above this threshold, the more the better. So we crossed 10 pointers, 11 pointers, 12 pointers, and the higher the pointers scale, the better is their production. And that's how we simplified analytics for our sales force. Did not want to teach them analytics. We wanted them to sell better, and that's how we developed a better agent pool, and our agent pool continues to be the flagship in the industry. Okay, this is a very interesting thing. The moment the insurance people talk about, it's about risk, right? Everybody out here faces a certain amount of risk, and so do insurance companies. To give you a perspective, and I was talking about context setting earlier, we pay about 20 to 25 claims every day. We pay out close to about 40 crores of claims every month, right? And this is all in the 0.5% I was talking about. In the 0.5% who die, since we are not gods, we can't predict yet. We have developed some capabilities by which we are able to see early death possibility or early mortality possibility. Right? It's okay if people die whenever they have to. If it is unnatural and if it is early, it impacts all of us, and that's this use case all about. What we developed is through a mix of our understanding of variables around products, our seller category, and our customers, we have a way by which the policy flows in. When it's being applied in our system, we realize, look, this is a little bit more unnatural. So we suspect that this is possibly the reason why it is. Most people are not very creative in fudging their age and date of birth. Some are very creative, right? So we have our capabilities developed there, which stops fraud right in the upstream. And because we are able to stop fraud, our book of business is a lot better. Because book of business better, we invest that and pay better to the policyholders. So we have stopped this leaky bucket. Every year we save close to about 50 to 60 crores in terms of profits that otherwise would have leaked as losses for us. CDR is crude death rate, which is how many in a base of 1,000 die. We used to have it at about 3.5 per 1,000 died. We brought it to about 1.4. It's not that they stopped dying and we became gods and we made them live longer. It's because we ensured that the bad lives didn't come to us. Yeah. Moving on, the moment our customers have onboarded us, we call them as an onboard verification exercise to see whether they have understood what they have bought. Life is all about A by E, actual to expected. Life is all about setting high expectations and living up to that expectations. So we wanted to know, and we want to know whether they have bought the right product, whether they have the ability to pay that premium, and for a longer period of time, right? So this is what we check, and every year we sell about 5 to 6 lakh policies, like 30, 40,000 every month. We can't be calling all. Sir, do you know what you bought? He will be surprised. No, actually, I don't want to buy life insurance. Yeah, he's going to say so. So we have developed some rule sets and predictive modeling which says, oops, I said that word. I said I wouldn't say that. I shouldn't be using technical jargon. So we are able to see in the top deciles who should be called and who should not be called, give them an assurance what they have bought. If we send something which is unnatural, we ask them to think about their product, purchase, and then let us know, and then only we onboard them and issue the policy. So this has saved us a lot of mis-selling and grievance problem. People don't understand, and then if they bought something and they suddenly receive a document which is legalese and they have not understood it, they'll start complaining, and we don't like to receive these complaints. This is how we do our welcome board process. About 99% of folks do not understand very well what they have bought, because it's a little bit technical product. So our intention is also to tell them what they have bought and how they have bought and how they will, as I was saying, life insurance for your loved one, it's not for you. You're not going to, see it. It's in the prospect of possibility of a risk arising, your loved ones will be taken care of. So we have to talk about that to them and say and understand and make sure that their families have also understood it. Therefore, they will keep continuing premiums till the 13th month, which is the annual cycle. Most of our policies are annual in nature. Now that they are here and they have been paying premiums, sometimes they forget. They don't keep a standing instruction. Somebody comes and disturbs, "Ye kya product le rakha hai? What is this product you bought? This is not good. This is not a right product." People do confuse them. So retaining, as I was saying, the pool forms better when people stay on with us for a longer and longer and longer period of time. That's about as old school as this can get. So by way of our conversations that they have with us in the call center, their engagement with us, their emails and their product purchase patterns and our own developed capabilities, we decide who to remind and whom not to remind. We will remind those who are likely to forget, right, that there's a premium due to you, sir or ma'am, and then you got to pay back in this particular period of time, and reassure to them and reiterate to them what are the benefits of such a product purchase. Now, we can't do it for our book, as I was saying, is about 35 lakhs lives. We can't call everyone. So we choose who to call and who not to call, and thereby save a lot of rupees in terms of the phone expenses and postage expenses. Okay. In the value cycle, you will see that we have sourced people, agents. We have been able to train them better. We have known where to set up shop. We have onboarded quality lives. We have taken off risky lives. We have called them and we have told them, look, this is where, this is the policy that you bought. We have retained them on our books. Now what? We got to sell more to them, because through our industry study, there's a worldwide well-known product or a research, Limra. It says in the course of a person's lifetime, if you engage well with your customer, it's not necessarily that from the same company, a customer can buy up to 6 to 7 products from you through the lifetime. How? He'll buy protection product, he'll buy savings product, they'll buy child product, they'll buy mortgage insurance product. Finally, everybody retires, right? So they'll buy a retirement product and so on and so forth. So how do we engage with them at the right prod, at the right time, at the right prod to say, hey, this is something that you bought before, this is doing well, would you like to buy something more? And life insurance is all about those tender moments. It's about those life stage changes. When a kid is born, when somebody gets married, when somebody buys a house, or there's a bereavement in a family, there's a loss in a family. These are the moments that they don't tell us, but we have to find through our agents or other media to get to know what's the right time to speak to them so that you buy your next best product. Yeah. So we do that in our agency, and about 10 to 12% of our business comes from such repeat purchase. We also, as I was saying, we sell through agents, we sell through large banks. This is about one of the use cases that we developed with our large banks. Banks and life insurance are a study in contrast. Bank is a data factory. Life insurance are passed on data, because it's 15, 20 years time. Most policies are annual premium in nature. People don't change residents that often, so they don't intimate you, they don't change jobs that often, right? And so on and so forth. At the end of the day, if you're in that 0.5%, what we get is dead body. Dead body doesn't emit any data, right? So we don't have so much data. Whereas we have so much data in the banks, thanks to demonetization before and after, there is at least, I would say, 50 to 60 transactions that each one of us does on the bank. And so, when we sell to bank customers and offer our solutions to them, how do we develop our understanding of the personality, the life stage, the age, the affluence, what does he need? You know, it's that famous story of you go to mother and me, so you are a mother in the making, and so on and so forth. All these narrations, all these transactions come to us, and we're able to improve our, the definition of the customer a lot better. So we work with them, and we have drastically improved our conversions, which are usually in the range of 1 to 2%. We've drastically enhanced our conversions ratios in the bank segment because of the wealth of information that we get. Moving on, all this was about small data, right? There is a lot, you don't have to do analytics only in big data. You can do a lot in small data, whatever data you have. We've also, in the e-com space, close to about 10% of the policies that we sell comes from the e-com space, and 50% of our profits come from the e-com space. Yeah, that's because people buy large sums of protection from us. The moment, and the analytics out here is we have a full-fledged Google Analytics suite out there. The capabilities that we have built there is the moment somebody goes into our site, buy online at maxlifeinsurance.com, you will, the basis of the data that you share with us, we will know whether you're really keen, are you keen, or you're just testing out, or you're from competition. I was just kidding, right? So we will know which of the categories basis the data that you have, and we will sort them as, warm, hot lead, not so interested, and so on and so forth. Wherever you come back from, wherever, whichever desktop, etc., etc. Somebody was asking about research online, purchase offline, or the other way around. So we are able to put in an omni-device experience to you, and therefore that gives a understanding of how keen are you in buying your life insurance product. And so we have allied it in this manner that a superior call center agent will call you, who's even better at it. So a very keen, interested person with a better seller is able to make the sale happen, and the conversation happens much more faster. So that's on the digital front. Sticking on digital, we have a large policy book. All of us are different, right? All of us are unique in some ways, but different in so many more ways. How do we know what do you need as your life insurance purchase, consideration? For that, what we did was we created a large data mining exercise. We understood what demographics that customers came in from, what is the sort of policy that you have, who's the type of seller who sold to you, is he still around or not, what are the type of quality of interactions that you've had, the frequency of that, and then put it in a 2x2 grid. As you can see here, life insurance is usually seen as an obligation sale. Please le lena. If the unfortunately that's how it is. So how likely are you to oblige, and how much do you need a person to come and offer that offering to you? So we put it in the 2x2 grid and created 4 personas, which is independent. I know what I want to buy. I don't need your person to come and speak with me, and I'm not here to oblige. So I'm independent, right? Well informed. I know what this is all about. I may not need a person, and I'm not definitely going to be obliging, right? Different shade. To safety seeker, I don't know what this is about. I need safe returns. Yeah, it's my money at the end of the day. Or a support seeker, neither do I know what this product is about, nor am I comfortable doing stuff by myself, so I need support, right? So we did this 4 clusters, we didn't stop there. Therefore what, right? And throughout this conversation or the session that I'm doing is more about what and not how. As I said in the beginning, it's all about what and not about how. So if you're in any of those personas, how will we know? We'll administer a couple of questions when you're looking up our website, or we have equipped our agents to ask you those 3 nice little questions, then sort of bracket you into one of these personas. Therefore, your journey either in a face-to-face approach or in a digital approach will be in a guided path. That is a faster path for you. So we understand you better because you told us some more things that we should be knowing about, and take you to the subsequent set of policy fulfillment and purchase consumption. Last thing, and we'll see whether we have some more time for bonus. Indians also like bonus, so 10 plus 2 if possible, we'll do it, right? As you're saying, we are sort of parched on data. The data is slow. So the beauty is about how with little data, you can really evolve a much better business enterprise. How can you support that? We had something very interesting going with the credit scores. All of us know credit scores is a surrogate for financial affluence and your ability to repay loans, and how worthy are you for financial products and transformation. This is what you all know. So we did all that. We used that to augment our data, and we know who's going to be more persistent, who's going to be less persistent, and so on and so forth. This is the usual works, but we're not going to be talking about the usual works out here. The holy grail of analytics is that you pick something really counterintuitive and you make a proof out of it, and you say, hey, this is what we discovered. Isn't that what gives us joy? Right? Otherwise, this is all simple, 2 plus 2 equal to 4. You got to do something a little different. All of us have grown up watching Bollywood, Hollywood, Tollywood movies where a really poor person will become a, a successful business magnate, and it's a classic rags to riches story, because that's what sells, right? If I were to ask you a question, in the business of life insurance, what we saw, do you believe, poor agents or poor sales folks will make it a big success? Would your answer be yes, because that's what we have seen in cinema? Or would you say no? How can a person who's so poor, really not being able to manage things by oneself, be able to offer good solutions for others in the domain of financial services? What would your answer be? No guesses, because I've given enough drama and background behind. Yes, sir. Yeah. So I don't mean poor by the literal sense of the term, but the scores tell you, which bracket you are in. We developed a capability by which, as I was saying in the outset, we hire our sales folk, who in turn hire agents, who in turn sell customers. That's our value chain. And some of these scores are in RAG, red, amber, green. So we realize that folks who have green scores, whom we hire as salespeople, who in turn hire green agents, green scored agents, who in turn sell to green customers. Whoa, wow, what a virtuous cycle, right? Versus a vicious cycle. Red sales employees selling to red agents, or hiring red agents, who in turn are selling to red customers. This is also possible, right? The virtuous cycle versus the vicious cycle. We saw a great deal of productivity difference, right? And the quality of book was significantly different. Therefore, what we did, this is not what we set out to do, but it was one of the hypotheses. We realized that we could onboard and select better, right? You cannot discriminate basis scores of saying, life has this karma. You were not born poor, but if you end up being poor, it's your problem. So you cannot discriminate on them, but you can give a lot of supplementary initiatives on how to improve their selling capability, onboard them better, train them better, and so on and so forth. We found that value change, and we found that big gap that exists between how we can, how we would like to be and how we are currently. So that was a very nice experimentation that we did with the external sources, and that's where we are. So our profits grew, about 10 to 12% of our profit before taxes can be attributable to analytics work. Wherever amount of rupees that we spend, we get about 12x or so as business benefits that we get. Our churns reduced, our claims reduced, our renewals improved, our agent retention was better, OPEX came down. So all the good things that we had. And we have received a few very good acclaims internationally and globally. But it's not a bed of roses. You'd have heard in the last 2 days about how life has got disrupted because of jam and whatnot, and so on and so forth. Without getting into telling you more of the same as to how your lives and my lives have got disrupted, we have also got disrupted. Every day there's something new that's happening. And so what's keeping us busy is this. We are an extremely retail focused organization. We are heavily regulated. Our products keep changing a lot. The nature of who we hire as agents, the nature of who we hire as sales force, the nature of customers that they bring to us keeps changing. So all our models are good for only about 6 to 7 months, and we'll have to replace them. So we're finding the current work is about how do we improvise their efficiency, how do we improve them, and so on and so forth. How do we use advanced capabilities to be at the cutting edge? I was unsure of Moore's law catching up with me, and I wanted to do a demo, but I skipped it. We have the industry first performance management bot, which tells you responses and questions. How much have I done? How much of business I have done? How much should I do to earn a particular incentive? How much should I do to get a particular level of promotion, and so on and so forth? All the performance management items are there, and we are embarking on self-service visualization on a real-time basis, on a mobile basis. So broadly, in a sense, to sum up, I've shared how life insurance as a category in general, life in certain aspects, and life insurance analytics as a play, and what's a bridge that we have got in between. Hope you found this interesting. I must say, I reckon this work to that of a split AC conditioner, air conditioner. It has an outdoor unit, gives a lot of noise and heat. That's me. The silent ones are people in my team who do the real work, who the indoor unit. And so Sanjay from my team has done a lot of work, and we have partners with EY, Jasjeet, if you can give a shout. So they are the ones who are the indoor unit who actually do the right work. So in a combination, we do what it takes out here. Happy to take your questions. I must share, I have not had, I think my photographs were being snapped, photographs along with the slides were being snapped. I have not been snapped as much after my marriage, but that's nice. I was also happy to see a lot of people coming and voluntarily listening about life insurance. So this is one item that I would like to leave behind, apart from analytics you would have heard about in the last 2 days. Life insurance is a product that you don't realize the value when you need it. When you need it, you will not have it, right? So think about it for you, for yourself, and for your loved ones, and may you cover yourself more. Yeah, happy to take questions. If you have any, usually in life insurance, there are not questions, there are only complaints. And if there are real tricky questions, I'll leave Sanjay to take the question. Yes, sir.
What is the importance of tool versus learning that, what is the importance of tool that you use to do this versus the time it takes to progressively learn more and all?
I like Sanjay when he says it, the people make the difference, it's not the tool, right? The tools will get you there. But what you have here is what makes a difference. And it's a state of evolution. I mean, at a point, we have hit a blank wall with the possible tools, so we have to keep upgrading. But you see, the traditional industry grade tools are getting replaced. So it's not tool that makes a difference, the people that make the difference. It's not only in analytics, I think in general, in life in general, it's about people who make a difference. Yes.
Hi, I'm Anand from AMZ.
Hi.
I just wanted to understand how are the aggregators like Policy Bazaar and all affecting your revenue on online?
Well, we are not in a us versus them setup. In our e-commerce, they contribute about, in our e-commerce, which is 10% of business, they contribute 30% of business, right? So I see it as a beautiful and not a or. Their presence helps us improve the salience of what life insurance is about, right? We are at 3.5% of GDP penetration. This used to be the case when it was in 2000, right? So the amount of insurance that people are supposed to have and they are not having is to the tune of $8.5 billion. It's not about me taking money from somebody else. I mean, there is so much around that I don't see them as competitors. In fact, they are helping us further the cause of taking savings and protection solutions to everybody.
Hello.
Yeah.
Initially, you mentioned the insurance as a social cause or social
good, yes.
Now you're using analytics to kind of identify the bad. Identify bad applicants.
Yeah.
And I have answered some of the questions. Some of them relate to health of my parents or my family history, which I don't have any control over. Okay. Right. So how ethical is that from a social perspective to actually not give insurance to people just because of their family history? Rather, I can't, like smoking makes sense, I can control that, but cancer in my family, I just can't control it.
I get your point. Let me answer it. We are not here to deny insurance. The point is insurance, and that is life insurance, not health insurance. Life insurance is replacement of income. Our parents have done their good, they have educated us, they have put us in good places, they are married off their kids. They are having the nice retirement time right now. Now is not the time for them to take life insurance, because if they are no longer there, we are not going to be happy we got 10 lakhs money. So for parents, yours. Okay. That's okay. We want to know how well your genetic history has been. It will not be taken to view your, by the way, your proposal any differently. By the way, when you write, you will know where you are. Okay, how well you have been. It's also equally important that you take and we take care of our good health. Today I missed my neck routine, so I have done my neck routine today. So we have to be aware of how well we take care of ourselves as well. Yep.
Just one last question, please.
Yeah.
Here.
One of the slides you mentioned use of external data.
Yeah.
How is external data? What kind of external data do you use?
We take credit scores, we take census, population, financial affluence, and ward level data. So these are what we have right now. We work with other banks as well, and in their premise work with whatever data they are willing to share.
How do you take control of the mis-selling which is happening? Because, for example, Policy Bazaar, someone was talking about,
Yeah.
Policy Bazaar, many of most, their mis-selling is of very high nature.
Okay.
How do you take control of that?
Yeah. We can't eradicate it. We have reduced it, and that's to a great extent by understanding through the onboard verification, which I was saying as maybe the third or the fourth use case is welcome calling. We are also getting into speech analytics where we understand the nuances of how a call is being closed. We are getting there. We've been able to reduce about 400 and 450 per 10,000 grievances to about half of that number. Well, thank you very much, and happy to take questions if you may have on anything outside. Thank you. It's been a pleasure.